Betty, and happy Tuesday. My goodness, is it a Monday or a Tuesday? I think it's a Tuesday.
It feels like a Monday.
I know. We've combined everything into a Monday and Tuesday. After a holiday, it was lovely though.
Right.
Yes. Well, happy Tuesday, everyone. I hope everyone had a lovely holiday, a Memorial Day celebration. Here in Colorado, we got a whole bunch of rain, which is absolutely amazing. We have a very special guest in here today for an interview. And of course, I have Joshua with me. How's it going, Mr. Josh?
It's going fabulous. I don't know. It was a good day. It was a very busy day. It went by really fast.
That's good. It did go by really fast.
It did.
I did not get to my to-do list at all. It was just managing the email box all day long.
Someone's going to be up till midnight.
Yes, right. Of course. That's totally great.
Yeah.
All right, to our amazing guest. Miss Michelle Oddo is here. How are you, Michelle?
I am good. Thank you.
Good. Thank you for coming in. Yes. Thank you for everyone on tuning in on K4CO Radio. If you want to look on Facebook to see our beautiful faces, we are streaming live on Facebook, Instagram, LinkedIn, and also YouTube.
We are pretty.
We are really pretty. Michelle is beautiful. If you haven't seen her live, she is like, I just need to take her out for fashion tips because that is very, very needed.
It's my side hustle.
Yeah, it's a side hustle. I like it. We need a girls' day for sure.
Yeah.
So thank you again for tuning in. We have Michelle Oddo with the Oddo Group, a division of Luminate Bank, and she is your mortgage loan expert. If you have any questions in today's kind of crazy world sometimes, I mean, it's always up and down.
It's not consistent.
It's definitely not consistent.
As soon as you think you've got it figured out, nope. It's going to change again.
Yes, for sure. Constantly. So if you are watching on Facebook, you can look at our beautiful faces and post in the comments below if you have questions. I highly recommend it. If you're looking to buy, looking to sell, we're going to go into a little more details today because Michelle definitely is the expert.
That she is.
Her phone number, 303-961-6906. And you can also go to her website at oddogroup.com or email her at michelle.oddo, that's ODDO, at goluminate.com. I love it. Say that 5 times fast. Well, how are you? Let's just start there.
Well, I agree. It's a Tuesday that feels like a Monday.
It does.
Was very crazy. Good weekend, busy. A lot of real estate happening and, amongst the holiday. But I'm good. I'm so happy to be here and chat about mortgages all day and night. That's what I love to do.
It's true. This probably kind of starts off the busy season for you all. I mean, it's kind of inching into, spring is definitely here. And so people would probably want to sell before summer.
Yeah.
Get that done.
We got it. It kind of started early this year. It started around probably mid-January, beginning of February.
Okay.
We really saw it just kind of come on strong. But to your point, most people do want to get moved in if they have kids before the summer's over. Nobody wants their kids to be that kid that starts school after everyone else has already made their friends. And so, we do see it pick up at this time of year. And I just think, too, like with the rates and everything, people have kind of just come to a decision that it is what it is. And if they need to make a change, they're not going to wait for another year to see what might happen.
I agree. I recommend that no matter what the year is because we have no crystal ball. I hear that so many times, like we're going to wait for the rates to change. Okay. Well, you don't know what's going to happen. If you're ready to move, do it.
Yeah.
Like buy or sell. That's my recommendation, but you're the expert.
People ask me all the time, is it the right time? When should I buy? When should I sell? And, I've been saying the same thing for 30 years. It's like when you find a house you love, and you can afford the payment, that's when you should buy. Right. Because trying to time the market is just impossible. And what you might gain in interest rate, you'll probably lose in price because homes are still appreciating, albeit lower, not quite at the trend they were, not 20% per year, thank goodness. That was not sustainable. But, 4%, 5%, 6%, depending on the area. And so, it's not, trying to time it doesn't make sense. I've bought homes at 10%, 8%, 4% interest rates, they've all been good investments. You can always refinance.
Yeah.
And I've always found it funny when I was in finance, I had like a mortgage calculator and people were just waiting for like 1/4% or a half. It's like the payment difference is not that big of a difference.
Yeah.
So
and we have like this the cost of waiting chart. We create charts based on where the rates are, different price points. But, a 0.5%, let's say on a $500,000 loan is about $180 a month. But to your point, Josh, if you waited till next year and a home appreciated, let's say it was a $600,000 home and it appreciated 5%, now you're going to pay, 630. And so it's just, your price point just keeps going up, and it kind of counteracts what you
were waiting for.
Yeah.
Exactly.
It's better to lock in the price, because you can always refinance the interest rate.
Very true. Very true.
I mean, if rates go up, then you're locked in at where you are today. So you did well. If rates go down, you can refinance. So there's really it's a win-win.
Right. When you get that house, when you find that house, get the house.
Get the house.
Don't wait. Yep.
I agree. Well, I wanted to backtrack a little for those of you that don't know about the Oddo group that are listening in. You guys are very unique, and you stand out in many different ways. I mean, you and your husband work together, which I find fascinating. I don't know if I could work with my husband, but just saying. But you both have different
You must be
models.
very close, is what she's saying.
Yes.
That or some days we
Exactly.
just don't talk at all. It just depends. I mean, we work together, and we have for 27 years. But we do separate things, to your point. Like, I work on forward mortgages, regular, traditional, mortgages that you would think of as a mortgage. Tim only does reverse, so a little bit different. He works with the seniors and 62 years old and older, and it's a different type of mortgage. So even though we're working together, we're not in each other's business. We have different referral partners, different clients, different everything.
Nice. Well, I would say, most people think they know about mortgages. And with people's wonderful knowledge, I'm going to use myself as an example. It's like, I go into a bank, I get a loan. And what is wrong with that scenario?
Gosh. I mean, that's a loaded question. Don't ever go to the bank. No, I'm teasing.
Exactly.
No, I mean, that could be okay. I'm not saying it's the worst thing, but it's a very one-size-fits-all. To use an analogy, if you go to an Italian restaurant and you were hoping to get Chinese food, you're going to be disappointed. So when you go into a bank, they have a certain set of products. That's all they have. It is sort of like they have a loan officer at the desk. And this isn't a slight on banks. There's plenty of banks that do a great job. We're attached to a bank. We're part of Luminate Bank. But our mortgage division is very specialized in mortgages. And that's really what we specialize in. And so there's so many products. There's so many situations. And that's just a very basic way to go. And there's not necessarily going to be a strategy for a long-term financial plan for unique situations. They're not open on nights or weekends when real estate's happening. I mean, there's about a million things why most realtors wouldn't recommend that. And again, there's those one-offs. There are some great loan officers and banks, I'm sure. I don't want to throw banks under the bus. But working with a mortgage company, a correspondent mortgage lender, is unique in the fact that we have tons of investors, lots of pricing, so many products. I always say it's kind of like a Swiss Army knife. I'm sure we'll unpack some of these products here soon, but in our interview. But it's a much more personalized approach with a plan and a strategy for building lifetime financial wealth through real estate versus, I just need a mortgage.
Right. No, I love that. The very first time I heard you speak, I really resonated with it because you and your husband both focus on the relationship piece, which I think is really important. And you all really are high touch, and you reach out all the time, before, through the process, after. It's not like one and done.
Right.
Like, you really follow up a lot, make sure that they're satisfied. Which I personally love. To us here, the relationship is so important in so many of the aspects. But to go back to the mortgage itself, I think a lot of people think, I need to put 20% down or X down, or I have to have a credit score of X. Is that the truth? Is that a myth?
Such a great question, Sarah.
I know.
It is not the truth. And that is the number one thing, and especially newer buyers or first-time buyers, if you ask them, most people believe they need to put 20% down. And that is just not accurate. And a lot of times not wise. So, our parents, our grandparents were very against PMI, private mortgage insurance. So that's where that thought process of you've got to have 20% down, don't waste your money on PMI. Well, the PMI today is not the PMI of the past. It's much more cost effective. It's much lower in terms of those monthly amounts, and depending on how much you're putting down, it really varies. But it doesn't make sense to wait to save for 20% down. A lot of younger buyers think, oh, I need to wait. And it takes a long time to get 20% down with today's, the cost of homes, inflation, budget, income, all the things. When you really unpack it and you look at after you've paid all of your monthly expenses, if you're a renter, insurance, car, cell phone, groceries, et cetera, how much do you really have left over at the end of the month? And how long will it take you to save another $50,000? And while you're doing that, home prices are just getting further and further away from you. And so it doesn't make sense to do that. It makes much more sense to get into a home with 5% down as a first-time buyer, or 3% down, or 3.5% down. If you have that and you can afford the payment and you qualify, and then let the home appreciate and build equity and wealth for you. Because again, if we use that even 4% appreciation, which is very, very conservative, if someone were to buy a home today for $500,000 and wait a year, 4% interest, they just made $20,000 in a year. But if in equity,
right?
But if they don't buy the home and they wait, and the home appreciates to 520, and they're trying to save that 20, it's a never-ending game. You can't get there. So that's a huge myth. Thank you for letting me bust that myth. And then great credit. A lot of people do think you have to have really good credit or perfect credit. Right. A lot of younger buyers think student loans are going to be a problem for them, or they look at the balances. We don't look at balances. We look at the monthly payment to qualify. So you'd be surprised, and we can do credit scores down into the 500s for FHA, 580, 550. Conventional, you want probably a 620 minimum, but it's not as high as people think. And a lot of times people are afraid to have you pull their credit. They want to wait and make sure it's perfect before you look at it. And it's like, that's another, to your point, like I'm not the bank, but I do have previous underwriting background, and we do fund through the bank, but we're the advisor. I'm there to help you figure out what do you need to do to get ready. Because if you're not ready, I want to help you get there. Don't try to fix yourself, be your own doctor, I say, and, come to us. Let me help you put together the situation, the solution, and look at your credit and figure out what we need to do to get there if you're not ready today.
You brought up such a good point. I actually never thought about that you're looking at, can you pay the monthly payment and not the balance? Because I think sometimes, the market, the world is just so much different than, 20 years ago when, these first-time home buyers are looking at, and better. Here in Colorado and Denver specifically, it's between $700,000 and $800,000 for a first-time home buyer.
Yeah, I would say a first-time home buyer could get somewhere around 5-ish to 6-ish. There are certain areas that definitely you could find a home in that price point, but there's less of those, but they do exist. Of course, townhomes and condos as well. But in terms of just a single family home, probably $550 minimum, and there are only a few pockets where it's safe that you'd want to buy a house in that price point. And then probably to your point, probably more like $650, $700 is a very average. It's surprising, so many first time buyers today of mine are buying in the 700 range. I just can't believe, that's what they're doing.
That blows me away.
They had a job I did not have.
First time home buyer buying for $700,000. A lot of them have, there's a lot of younger buyers or first time buyers that either they're out of college, they have a job, their income is good, they just haven't saved the down payment, but they can afford the payment. Or more than ever, we're seeing a lot of younger buyers get gifts from family members, like parents who have a lot of equity in their home or have a retirement or something like that, and they gift their kids money for a down payment, and that's very helpful. But I also have a lot of buyers, again, that are buying in that 550 range, 600, and they're just very modest, and they just want to get in. A cute little bungalow in Inglewood or something. You can find something like that in that price point.
Yep. There are lots of different pockets. I like it. Yeah. To your point, this is growing rapidly, our state. Yeah. They keep coming in droves. And so there are many more opportunities than, again, I'm going to date myself. I've been around for 40 plus years, and Colorado's changed a bit.
Yeah.
Oh yeah.
You're a native too, Josh.
I bought my first and current house like almost 20 years ago, and it was like 220. And
I
that
know.
even then I was just like, oh my gosh, I can't
know.
imagine a first time home buyer around
know.
500, 600. That's
know.
just crazy.
We bought our first house. It was in Grant Ranch, and we paid $248. So this would have been like 26 years ago, something like that. And I remember Tim and I say, $250,000. Oh my God.
It's all relative, right?
Felt
Isn't that
so
funny?
high, or now it's thrilled to have that. But it's fun. Like when I lend in 50 states, so I still do loans in Kansas and Missouri and Iowa and places where you can really buy a really cute home for $250, $300, like a really nice house. But everything is relative. It'll appreciate at a lower rate. The incomes are lower, So
Yeah, we could
Colorado,
live in,
we have a lot of great things to offset our housing prices.
For sure. It is
do.
completely all relative.
Yeah.
We could live in downtown New York and they'd be like $1 million. Psh, are you kidding?
Here's an
Like,
outhouse.
deal.
Exactly.
Well, and that's
yeah.
why, when you talk about saving for a down payment, and I always love when we have clients move from, let's just say, San Francisco or New York, and they're in their 50s and they've never bought a home, and they were paying $8,000 a month rent.
Right.
They think we are a bargain. They are thrilled to buy a home here.
Yeah.
Right.
So, I'm like, how could you be in your 50s and never have bought a home? Well, when home prices are what they are there,
Yeah.
they just got
exactly.
away from them quicker than they could ever get in.
Right. Well, speaking of maybe increasing wealth or increasing income, how can you use your mortgage or that situation buying a home as a tool to build some wealth?
Well, once you've owned the home, as you're making payments, and a lot of buyers forget this, they think of the mortgage as a debt, like this is going to be an expense. And yes, it is an expense, but unlike rent, it is for savings. You're paying yourself because that house is a savings account shaped like a house. So every monthly mortgage payment that you make, two things are happening at the same time. The house is appreciating and the mortgage balance is going down. And what that creates is equity, which is your money. That's your savings in a savings account shaped like a house. So I like to say that once you've built some equity in that home, it's really a good time to look at, how do I leverage this, or should I leverage this? Right. And sometimes it's paying off debt, refinancing, or doing some sort of a home equity line to get equity out of the home so they can realign their debt if they have a high interest rate debt, high payments, things like that, or take some of that money out and buy an investment property or buy a second home. So there's a lot of things you can do with equity. And then there's house hacking. Some buyers, buy a home, stay in it for a few years, let the equity build, and sell it and take the equity and parlay it into that next home. Right. So it is your money. It is savings. It's just in the different form of a house.
I love it. It's
Yeah.
a savings account in the shape of a house.
Yeah, it's for savings.
I really like it. Well, you got into it a little bit. So is refinancing still worth it in today's market? I mean, you kind of hit the nail on the head already, but
Yeah. Let's refinance.
let's refinance.
Everybody
Call
refinance.
Michelle, 303-961-6906. Refinance today.
Yeah, you can do it. Well, so we really did refinance all of America a few years ago. I mean, I think pretty much everybody has a sub for, not everybody, but a lot of people do have those lower rates. However, it still could make sense. And there are situations where I am doing things like, they have a great interest rate of 3 or 4% or even 2.875, some of those lucky people. But they also have a home equity line of credit that has a balance of $100,000, and it's now at 8.5 or 9% because those are based on prime,
Right.
plus a margin, and those have gone up. And then they have maybe, $20,000, $30,000, $40,000 in credit card debt, which is 27% interest rate, and $1,000 car payment, and on and on. And so sometimes, depending on the borrower's situation, I am doing refinances where, although we are raising the interest rate on the first mortgage, by realigning their debt, we are saving them a couple $1,000s a month in monthly payment, which is huge. That could change somebody's life. Sometimes they have a balloon mortgage or they have an adjustable mortgage, and we need to refinance those to take people out of those interest rates that have maybe adjusted if they bought a year or so ago and that rate was at 5 and now they're at 7 or something like that. We do hear about those. So there are situations where refinancing is making a lot of sense. And another one that's not as fun to talk about, but it is important that we talk about it, is divorce lending. So I'm certified in divorce lending, and I have 2 this month that we're working on in June, where one of the 2 spouses, which are now maybe divorced or going through a divorce, wants to stay in the home, and they will need to pay off that soon to be ex-spouse their portion of the equity or whatever's been agreed upon in the divorce, and pay off the mortgage. So, let's just say you're married and you have a balance on your mortgage of $400,000, and maybe the house is worth $800,000, and now the ex-spouse wants to let you keep the home. You want to stay in the home. Maybe you want to keep your kids in the same school, whatever it is. You would have to, most likely, depending on the decree and what was agreed upon, get that first mortgage paid off and out of the other person's name, and give them a portion of their equity. So you may have to refinance that $400,000 mortgage to a $600,000 balance now, with paying off the first and the spouse and all the things. But a lot of times we can roll debt in there and actually bring their payments down. I have one right now where he's staying in the home. He's going to pay off the ex, but he had a car, kind of similar to my previous situation. He's paying off a $1,000 car payment, paying off a home improvement loan that they had, and a solar loan, and some credit cards, and paying her. And she didn't have to get half the equity because they did something different with retirement and whatnot. So every situation's different.
Right.
But divorce lending is a good reason where we are refinancing, and it makes sense if somebody wants to stay in that home and they need to pay the other person off.
Okay.
Yeah.
Do they have
Nice.
marriage lending?
Well, in reverse,
Oh, that would be a good
sometimes
thing,
I
yeah.
have a mortgage. Well, this is a great example. And they bought the home on their own, and now they're getting married, and the spouse is going to move in, and now they're going to do a renovation, and they want to take money out of the home and put both of them on the mortgage. And so sometimes we don't always tear people's apart on their mortgages. Sometimes we put them together. But yeah, different situations. And then sometimes we have, like, I have a situation right now where 2 people are going to sell their home, and then they're going to buy together. They're each have their own homes. And so many fun things we can do.
I'm sure you kind of become a therapist through all of this.
Yeah, I kind of do, actually. And even with, yes, a divorce is emotional, and those are hard ones. But even when people are happy, buying a home is stressful.
Yes.
And they say it's one of the top 5. I think that's like new job, death, wedding, divorce, buying a home, moving. So, I definitely have to be that person that...
Do it all in 3 months. It's great.
I did that once.
Oh, nice. See, there you go.
Yeah.
Rip off the Band-Aid.
When Tim and I moved from Florida, switched my job, we got engaged, bought a house. I got shingles. I was so stressed out.
Oh, gosh. Okay.
This is a long time ago,
Yeah.
20 years ago.
Oh, that
Anyway,
makes sense.
So I don't recommend that.
Yeah, it's hard. I'm like you, though. I pile everything on into about a 2-month period. I'm like, just get it all done.
Yeah, strip the Band-Aid.
Exactly.
We got through it. We're
Yeah,
fine.
exactly. And look at you now, 26, 27 years later, and
no problem.
you're kicking butt, taking names.
Yeah,
I
it's
love
okay.
it.
Yeah. But no, I really do, when I have clients that are going through any type of situation, even if it doesn't feel like it should be stressful, I know that buying a home or going through the mortgage process is stressful to the other person. Not to me. It's similar to like trying to teach somebody to drive a stick shift. Like, if you already know how to do it, to stop and think about all those pieces and breaking it down, like, we just don't think about it. You just do it.
Right.
Well, for me, it's the same thing. Like, I don't look at it as stressful. Like, I'm like, well, why is it stressful? But I have to understand that whoever's going through it on the other side, they don't know all the pieces. They don't know the process. They don't know at what point they are in the timeline. They don't know what to expect. So we really like I like to have all of that, very laid out very clearly. We have a exact process. It's on our website. All through the loan process, there's so many touch points and things that come along. You brought this up before, Sarah, but we really try to just hold that client's hand all the way through a combination of, there's automatic notifications that come out, plus our phone call touch points, plus okay, here's what's going to happen next. Here's what you can expect. and just trying to do that all the way through so that any kind of anxiety that might come up, we're just trying to head that at the pass.
I agree. It's worth bringing up your website again. So it's oddogroup.com. That's ODDO group.com. And all of this information is laid out. And I love that it's step by step because it can be daunting. To your point, it's when you learn something new, and a house is usually the biggest asset that you're going to buy. So even more of a need to have an expert that's been doing this for many decades, knows the market, and knows all the different programs that are able and out there.
Yeah, just make sure we have your back, and
Exactly.
and that we're never here to sell anything. We're just here to advise and be an advisor on a lot of levels. Debt realignment. What's the right loan for you? The right strategy. Are you going to stay in the home? Is it a 5-year home? All those things matter. And it's never just, I need a mortgage. Well, there's some things we want to talk about to make sure that we're doing the right thing for you, and that we're doing something that, would I do this for myself? And if I wouldn't, how would I expect somebody else to do it? So it needs to make sense, and it needs to be the right thing for them.
Oh, I love that.
Speaking about the right thing, actually, so it's been a long time since I was in finance, and I worked with a mortgage loan officer and everything. And one of the biggest issues that I remember, at least back in the day, was self-employed people, especially because they have their tricks to make sure that, there's some self-employed people where it's like, personally, they don't make any money because they run everything through the business. Then it's like, okay, we can't help you.
Right.
So I'm wondering, are there different options that exist for self-employed people that they don't know about?
Yeah. Oh, there's so many. And I love this question. This is such a good one because this is another myth. I think a lot of people think, I'm self-employed, I can't get a mortgage, or I write everything off, I have no income, and so I just can't do it. And that's just not the case. We have so many great programs, even after, and I love that both of you used to be in finance. I think this is hilarious. Maybe one day I'll be in radio. Who knows? No, I'm just kidding. I've been doing this 30
Don't ever
years.
discount it.
I know, right? No, but it's fun to talk to both of you because you do have that background, and so you get it. And for anyone who remembers '08, we had the mortgage meltdown, and we were doing crazy mortgages. And not that I ever liked doing that or condoned it. That just was the market, and so that was what was available to people. However, we took a huge pendulum swing the other way, and it did. And there was a point, probably, 2018, probably up until maybe 7-8 years ago, it was very strict, and it was very much, we got very vanilla, and it had to be, if it wasn't on the tax returns, you couldn't do it, that kind of thing.
Right.
But we've kind of come back to a middle ground, and it's a really great middle ground. It's not the crazies of the pre-08, and it's not the super strict, doesn't make sense. We're somewhere in the middle where we have programs that do still have some documentation. We can do bank statements, so maybe 12 or 24 months business or personal bank statements where we're tracking true actual deposits, real money coming in, that we can see that you're really making this and can afford it. And then we apply an expense ratio to those deposit averages. That's an example. We also have programs where we can use just the 1099. So if we have a contractor who gets a 1099, which they're going to file on a Schedule C, it'll be a self-employed person, and there could be a lot of write-offs on that. But a 1099, a good example would be a realtor. A lot of realtors make good money, but they don't always budget their taxes. They don't put money aside for taxes.
Right.
And then at the end of the year, when they go to file their taxes, they're like, oh crap, I've got all. So now their tax returns are all, so you can use, for a realtor is a good example, we can use a 1099 and we can use 90% of that income. So not necessarily go off the tax return, because that does ding them with a lot of paper write-offs, and a lot of write-offs that aren't necessarily, they might be more just their living expenses that they write through personally. So we can actually use a 1099 and get a lot more income, and that's a program we have. And then for investors, we have what's called the DSCR. So it's a debt service coverage ratio loan.
Okay.
We're the king of the acronyms in our industry, right?
Oh, yeah.
We've got all the acronyms: LTV, DTI,
Yes.
whatever.
When
all the
Tim was
things.
here, I was like, what is a HECM? Explain all of
It's
this
all
to
about
me.
the acronyms. So DSCR is debt service coverage ratio loan, and it's basically a great loan for investors. So a lot of investors have, multiple LLCs with their different properties in it,
Yep.
all kinds of write-offs. They buy and sell properties. They could have a good year, a bad year. So the DSCR loan really just uses the rent on the investment property they're purchasing to offset at a certain ratio the mortgage payment. Great program. So there's a lot of make sense programs that would help a self-employed or an investor buy a property that maybe their tax returns aren't a true reflection of the income that they're making because of those write-offs that they utilize that the IRS gives us. We're allowed to use them. They're not illegal. They just, they're great when you're filing your taxes and not so great when you're trying to get a mortgage.
Exactly.
Would there be a word of advice for either those first-time home buyers or one, and in my situation, I'll use myself, throw myself into the bus. I'm really good at that. I like to move about every 18 months.
Oh, fun.
No.
I love you.
I'm a poster child of what not to do in life.
Yeah.
Very much so. Don't write off radio. You never know. You definitely, you could be in that. So whether you're a first-time home buyer or been doing this, is there a question that you think those people should be asking that sometimes they don't ask?
Oh gosh, that's a good question. There's a lot of things. The biggest mistakes I think buyers make are they, push button get mortgage, like big box lenders where there's no strategy, there's no personal attention, there's no thought process into their future. So that'd be one thing. I think buying and selling every 18 months could be potentially not great because you're paying for realtor fees, you're paying for
movers,
could get expensive, movers, all the things. However, if you bought something that appreciated greatly or it was a huge awesome investment and you wanted to parlay that money, that could be okay. But questions they may not be asking are, should I pay points? If I'm going to turn around and refinance this loan in a year or two, it may not make sense to pay a bunch of points up front. A lot of lenders really push low rate and they have points on those loans and they don't explain what the points are. And some people just don't know and don't ask. And they just think, oh, I want the lowest rate. Well, sometimes paying those points doesn't make sense if you know you're going to probably be paying that loan off in a year or two because rates may drop. Right. We are in a market where we think rates will come down and you may want to refinance. But it might make sense to pay some points. So I like to sometimes hedge my bet, with the borrower. We talk about their plans and sometimes a little bit of points could make sense. I think the biggest underused and maybe not asked about option out there is getting the seller to pay closing costs. Maybe they can give you concessions for a rate buy down or your closing costs or both. And sometimes, like I have a loan right now where we're doing, it's an FHA loan, and I was able to get him a really good rate, but it's instead of paying points to buy the rate down, he's going to take a little bit higher interest rate. It's not much higher to get a big credit from us as the lender to help with his closing costs. So he'll get about a $5,000 credit on this loan by taking a slightly higher interest rate. And like you talked about earlier, Josh, it's not going to change his payment that much.
Right.
But that $5,000 is worth a lot to him today for closing costs. So maybe just one of the things that I would recommend is a strategy over what's the best rate? What's the best rate? That's not always the best strategy. Right. So what a lot of buyers don't ask is, what are other options? What are some great strategies? Should I do an ARM? Should I get seller pay closing costs? What's a 2-1 buy down? There's so many great things out there that if you don't ask and you may not be told, you could be leaving a lot of money on the table.
I agree. The point buy down is a really valid point because it's so rarely talked about. So I would say definitely be talking about all the different options of what really works best for you.
And we're so conditioned to look at the rate. Yeah. We're so conditioned to look at that number.
Yes.
When we haven't been taught or conditioned to look at anything else besides that. You might think it's a great deal. Ooh, I get that knocked down about 0.75, but what is that actually costing you?
Yeah, long term. And especially, so that's where the APR is very helpful because the APR, and that's the biggest question, it's the biggest mystery, like, why is the rate in the APR different? And to explain that's kind of convoluted. But the APR technically is what you're paying over time for that loan when you include closing costs, PMI, upfront points, and put it back over the loan and reamortize it as kind of the effective cost of the loan. Right. The rate is the rate. That truly is your rate. It's nothing tricky there. But the APR is where those points would get loaded in. And so if your APR is dramatically higher than your rate, something's wrong. And a lot of the refinance, there's so much bait and switch out there. There's a lot of people getting mail right now. Refi, we'll give you this rate, and it looks really great. And a lot of my clients, most of my clients always, I love how you asked how we stay in touch, Sarah, because that's a big thing for me. Right. I've had clients from 10, 15, 20 years ago. We refinance them. They come back, they buy again, they send their family. My clients are my clients for life typically, which I love. Yeah. So when they get crazy mail, they'll usually send me a picture or call me, text it, whatever. Is this a good deal? And I'll look at it with them and I'll say, okay, well, they're charging you 3 points. That's $18,000 to get this rate. No, that's not a good deal. Let's wait till next year. Rates are going to probably go down more, and that's when it'll make more sense, So just being careful to look at the cost and the points, and do they make sense? I'm not saying points don't make sense, that they never make sense. Sometimes they do, but it needs to be evaluated, and you need to be with someone you trust that will be an advisor and will look at those numbers and unpack it for you. Look at the amortization schedule, look at the cost, the ROI, how long does it take to recoup, all those things.
I love it. I do love the relationship aspect of it. Yeah. It's to be, if you were a client for life, because you always want to be on the top of their mind, because you never know when that next move is going to come, when they're going to sell their home. So to stay in constant touch. Yeah. And sometimes, these mailers are sometimes too good to be true. Yeah. And if it,
most of the time, they're too good to be true.
You can spend $20 on a month for a brand new home. I'd be like, for Barbie?
There's a reason why most of your mail should go into the trash receptacle.
Yeah, it's unfortunately kind of true. But.
Yeah, it's unfortunate how much junk mail people do get once they buy a home too, because once that deed of trust is recorded, it's public record. Yeah. And that's where, we always tell our clients at closing, you're going to get so many things. Your warranty's up. Okay, but you didn't have a warranty. Pay $85 to get a copy of your deed. Your deed of trust is free at the courthouse. So all these crazy things they get, and we just tell them, just send us a picture. 99% of it's junk mail, or it'll look like it's coming from us. It'll say Illuminate Bank, urgent, you must reply. But then at the bottom, like in really tiny font, it says it's not. It's really not on behalf of. So just be careful. That's what we tell. Buyer beware.
I totally agree.
And that's what I love about the relationship too, is they just call you. Whereas, you go to a big bank or something like that, do that. Well, after you closed everything, well, here's our customer service number.
Right.
Call somebody that you have absolutely no idea who they are. Right. Get transferred around all over just for a question, and your customer call you. And that's where the relationship, that's where you get the people calling after many years because of that fact, I think. Personally.
Yeah, I just had a client. This was interesting. They, their insurance, their homeowner's insurance, which is a big deal right now, by the way. That's just a whole nother subject. We can run another time. But insurances are so expensive. They've gone up so much. And a lot of lenders, when they do their estimates, they show that insurance really low. So it makes it look like the payment's going to be low. And then when they go and get their real quote, it's like, no, it's not $150 a month. It's $300 a month or whatever, right? So anyway, I had a client, they were new buyers, and they unfortunately had a couple claims because their cars got broken into when they were renters in the parking lot. So when they went to get insurance, the premium was really high because that was still on their record. But speaking to a relationship, we ended up calling an agent that we knew just to see if we could help them get a better deal. And that agent really delved in and said, no, we can't give them a better deal today, but in 4 months, this claim is going to drop off, and then their premium can go down about $1,500 for the year. So they went ahead and closed at that higher premium, and then 4 months later, because of the relationship, called me back and said, hey, Michelle, can you help us? So we got them back with that other agent, reworked the insurance, helped them with my concierge person on my team, get them with the servicer, get the new insurance in place with their mortgage. So all those things that are really stressful. And also I got another great review this past week when their loan got transferred. Sometimes loans get sold.
They do.
They just do.
Yeah.
Even the big lenders, the big banks, they sell because they want to unload those credit lines to lend more, right? It's all about the deposit ratio to lending. So that can be stressful. And so now, we have a concierge person on our team that helps them with that the loan transfer and helping them get their loans set up. And So all those things, just trying to we want to make lending fun.
Yeah.
Put the fun in funding. That's what I say.
Oh, that's awesome.
I like that.
And I do love that you have a group. You know, you have a lot of people, so it's not really a one woman, one man show.
Yeah.
Is you guys all really work together in
We
kind of
do.
different facets, which is very valuable.
We are so blessed too, because although I do have a team, and some people they love that, and some people think, oh, it's a team, I won't get you, and they don't like that. But what's really great is I'm still at the forefront of all of it. I watch over it all the way through. I always know what's happening with the loan because I'm copied in on all of it. But my team has been with me a long time. My processor's been with me like 10 years. My production partner, 7. I had a production partner that was with me for 22 years. She just retired recently. But all of our teammates have been with us 7, 10, 12 years. So they're very much family. We all care about the client like it's our family, like we would do for ourselves. It's really a big deal to us.
Yeah. I'm curious, since you've been so lucky to do this for this long, you've seen probably a lot of changes over the years and over the decades. I love this next question. This really sparked a lot of thought in my brain, for the American dream. I think it's such a funny, it's almost an elusive dream of what people think the American dream is. But I'm curious, over, in the 80s and 90s, when people wanted the American dream, have you seen it over the last couple decades that it's changed over what people really want out of a home or an environment or the concept of family? I know that's kind of a broad question.
Yeah, I mean, I do think the different generations have different mindset, right? And we have so many different buyer pools right now. You still have you've got your boomers and your Gen X and Gen Z and millennials and, all these different groups, and they're all buyers. But we're seeing more intergenerational buying. So we're seeing a lot of families combining. So maybe the parents and the kids, because of affordability,
Right.
Or maybe help with watching the kids or health or all the reasons.
Right.
So that's something that I think more builders are building those types of homes. We're seeing more buyers wanting those types of homes. Also, I think with the pandemic, a lot of younger buyers who used to love that downtown, and I'm not saying downtown's not still appealing. Some people still really want that, but we really did see a lot of younger buyers go out more into the suburbs and become more just wanting something different, wanting a little more space, wanting a yard, wanting a home office, wanting to be able to homeschool. So just having different needs, that's changed a lot for sure. And I also think that a bigger portion of our income as younger buyers who don't have a big down payment, a bigger portion of their income is going to a mortgage payment than maybe traditionally what we'd seen in the past. But a lot of them have less other debt. So they're just switching where they're choosing to spend their money.
Right.
Okay.
So we're seeing a lot of that. Whereas I think the American dream, a lot of older buyers, or depending on, like, let's just say Gen X, maybe have a lot of credit, have a lot of debt, because that was a thing. Like you could buy now, interest free,
Pay
get your
later.
washer dryer, buy your so that where like a lot of the younger buyers don't do that. They save a little bit better and they don't have as much debt, which is great. And they're able to spend a little more on a home payment. So those things have shifted. But, in terms of like what is the American dream, has it changed? I mean, there is a sector of people who think, oh, I don't ever want to own a home and I just want to be free, just travel the world with a backpack. And like, more power to you.
I would love to do
But
that.
I mean, it sounds really great.
It does sound great.
Yeah, at one point my
Dump it all.
husband's like, let's just have a camper and homes and drive around. And I was like, are you nuts? I'm never doing that. There's no way. I mean, maybe for a month. I'm not living like that. But some people do. Whatever. More power to you. I'm not. No judgment here. No judgment zone. I do mortgages. I believe in real estate. And I think that's fine for a period. But we know that the average, that the difference in net worth from a homeowner to a renter at the time of retirement is 40 times greater. So there's a price to pay for all that freedom.
For sure.
It's like you're not building anything. So that is one thing. There are some influencers that are really big on like, you don't need to own a home, just be free. And it's like, that's great, but that's just not a great long-term plan.
Long term, yeah. I mean,
Short-term, maybe.
I would have loved to backpack through Europe for a solid year.
Yeah.
I was really fortunate in 2008, I think is when my world, went kaput because being in the mortgage industry, I maybe was in the subprime world. And
All the crap hit the fan.
everything just hit. And I did get to travel for 6 months with my dad. And I've always looked back on it and I'm like, yay. So for those of you that maybe are on the younger side or older side, I don't care. Go do it. Like
Tim was telling me he just saw some older retired lady, somebody he saw on social, that she figured out she could live on a cruise perpetually, and it was cheaper than so she
I
like
read
this
about
is
that,
the thing
actually.
that
Yeah.
so she's retired, and she could live on a cruise ship, and she factored it all in because she gets all of her meals and this and that and whatever, and she doesn't need a vehicle to travel and all the things. But I'm like, that would get old too, but whatever. But more power to you. But I'm a huge believer in real estate. We've made,
For sure.
We've always owned properties, multiple properties, rentals, second homes, investment properties, and we've made money on that. And I've had clients over the years make so much money through their investments of real estate that I'm so thankful and proud to be a part of that journey with them and to watch and help them grow that wealth. And I do believe you should be diversified. I don't think everything should be real estate. I love crypto and I love stocks and I love 401k and like all those things. I think they're all great, but I do think you should diversify. But real estate should definitely be a big portion of your retirement plan, in my opinion.
I totally agree. I mean, in some situations, renting is the only option, but I agree with a mortgage, or if you own a home or real estate, you're building that equity. Like you said, I love it. It's a savings account in the shape of a house.
Yeah.
That's exactly what it is.
And it's for savings. And I do think that there are ways to make it work, even if you don't think so. There's down payment assistance. There's a lot of different things out there. And you're right. There are some people that just can't do it. And I get that. And that's, let's try to make a plan. Let's help you get there one day if that's your goal. If it's not your goal, no one wants to force you into it. If it's your goal, I bet we can figure out a way to get you there. But again, if you can afford the payment, you should do it.
I know.
Jump in.
Now is the time.
Yeah.
I know. Josh, so you look like you have a question.
Well, I did want to kind of get into like the trends kind of going on right now.
Yeah.
Because I'm curious what you see. Because, for a long time, Colorado has just been going up and up and up and up and up and high. I mean, I bought mine for like 220. It's worth over 5 now, and it just keeps going up and up. Do you see like a plateau starting to emerge? Do you see something settling down? Do you see it continuing to rise? What do you see in the Colorado market?
Yeah, the Colorado market's interesting. We talked about pockets earlier. Every neighborhood is so unique and individualized. There's really not a blanket statement for Colorado as a whole, but I will tell you what we do see nationally and Colorado as a whole is definitely a settling down on the appreciation. I would say it's plateaued in terms of like it's not going to appreciate, but it has slowed down, and that is a blessing. A home appreciation trend of 20 and 30% a year is not sustainable. It's dangerous, and it creates a future housing bubble, which we don't want to see. So we're thankful for that. We want that. That was part of why interest rates were increased. Why we saw the raise go from 3 to 8% in a year was to control that crazy inflation, the housing prices being one of them. So yes, it has come down. Nationally speaking, we're seeing 4 to 6% is what we're on trend for. That's what all the economists predict, and that's what we're seeing. But there are pockets that will still see pretty high appreciation. There's certain areas in Colorado that just traditionally never
Slow down. Right.
And it's like Cherry Creek, Hilltop, Crestmore, the Highlands, Wash Park, Congress Park. Some of those areas, they just really continue to go. And then there's other areas that have maybe tapered down a little bit, but they're still strong. And they're, the Castle Rock, Parker, Highlands Ranch. Golden's still really strong. Lakewood, Arvada, Westminster. And we just have so many great neighborhoods. Sedalia, a lot of the acreage people are really into right now. So that's really taken off. There's some really cool properties in Sedalia and those areas. So yeah, I just think that we're very blessed in Colorado. We do not have an industry. We're not one industry specific, right? Like, Texas was really heavy oil, or California was maybe tech, or Florida is tourism, or, Colorado has a lot of everything. We've got tech, we've got, tourism, we've got real estate, we've got so many different industries that we are very well insulated. And even in the worst markets, we've fared better than a lot of other. We have oil. We have a lot of things.
We have everything. That's why they come in droves.
Yeah, energy and aerospace. Colorado's a huge aerospace right now.
Oh my gosh, yeah.
So yeah, we just have so many industries. A lot of medical that we're very well insulated with situations that could arise.
Especially just South Denver. I mean, we are inundated with everything that you just said. I mean, we are a hot market.
Yeah.
I am curious because you can loan in every single 50 states, right? Which is amazing.
Very cool.
So, I mean, I love that. I hope we're reaching if you're in any state right now, call Michelle.
Arizona, call me.
Arizona. That was my
Texas,
next.
call me.
So, are those the two states outside of Colorado? I'm curious where most people are calling you.
It's really interesting. When we parlayed to the bank platform, because we were a mortgage company owned by a bank, but we didn't have the whole bank platform for a long time. So there were some things behind the scenes legally where we integrated, and we're now a wholly owned subsidiary, a bunch of legal stuff. Anyway, all that to say, when that all took place, I thought, well, maybe I'll pick a couple states and really market those areas. Like, I grew up in Florida. Florida's where my heart is. People that know me know I'm an ocean girl. So I thought, I know so many people there. Tim's from California. But what ended up happening is we don't market any of it, but all of my clients that I've known for several thousand people in my database and realtors and all the rest, every one of those people, somehow they're buying a second home in Arizona or in Florida, or their kids going to school in Kansas and they need a house there for the roommates, or they're relocating to Kentucky. Like, that's a loan I just did. So there is no one area. Almost every single month I have a loan somewhere that's not Colorado. I mean, tons of Colorado, don't get me wrong. That's my, the base of my business, my bread and butter, right? But I might have 10 or 12 loans in Colorado, but have one in Arizona and one in California. I closed a loan in California last month. I closed a loan in Kentucky. I've got one in Florida and Texas right now. So they're just kind of all over. I've got somebody buying a second home in Nebraska and someone buying a second home in Kansas. And I posted that on my social, and someone said, "Who would buy a home in Kansas?" I said, "Well, he grew up there, and they're going to retire there, and they want that to be where they want to go, you know."
Yeah, Arizona, I definitely think, but I've heard that, of course. I mean, the snowbirds, they all want to migrate, and I get it, but I mean, I don't love the snow as much as Josh does, but in the mountains, it's great. But I understand if you want the beautiful weather.
South Dakota, we've helped people. A lot of people want Airbnb type properties where they could do short term rentals. So what are places people go travel to? And that's also another place that another type of loan that I get a lot of. So yeah, it's really interesting. So to answer your question, there's not a certain state that's like the state, and I don't really market any of them, but somehow I just get loans all over the dang place.
That's a good thing.
Yeah, or like I had a client who her brother lived in another state, and so he called me, and it was in Washington. So we did a home in Washington, and yeah, it's crazy.
I was thinking Montana, actually. I've
done a loan in Montana. Okay. I've done a couple, actually. My next door neighbor's kids went to school there. So that's kind of how that started. And then it just parlayed from there because once you do one, then they know somebody.
Right. Exactly.
Well, that's
they
a
tell
good
two
thing.
people and so on.
A referral basis is amazing. That's what you want.
Yeah, word of mouth. All of my business is 99%, I would say, 99.9%. Referral, repeat, word of mouth.
That's awesome.
And I do a lot of social media, and we
Yes.
do our emails weekly to the clients with videos and to my realtor database, and they're on my social, and we also do mailing pieces. I mean, we just try to really wrap our arms around all of our clients, and just stay in touch forever.
You're so involved in the community. I mean, we could talk a whole segment on just what you do for the community.
Yeah.
You are so involved on the social media aspect. I know you're involved in a lot of chamber work. You help promote other people's businesses all the time, which is really important. It speaks to how you are, when you're out in the world.
Yeah, community. It's about the community, and it's about lifting each other. We're only as strong as each other's businesses, right? If our community's not thriving, then that doesn't help the real estate market or each other, or obviously we care about the people personally, but also to keep our community strong, just trying to help each other. This is really helpful. We're sponsoring the beer hole at our chamber golf tournament.
Oh, nice. Okay.
So come check us out at the beer hole.
The beer hole.
Yeah, it's important. No,
what is a beer hole?
You have to chug a beer before you hit.
Yeah, so
thank you.
Yeah, so
Thinking something different. Thank you for clarifying.
So the chamber golf tournament this year, the South Metro Denver Chamber, you can always sponsor a hole, and you set up your table, and we've done that every year, different. But this year, one of the holes will have like the beer cart there. Gotcha. I was kind of, I'm saying I'm helping the community by.
You are. You're getting your name out there. You're talking to everyone that comes in, and this is at Meridian, correct? Meridian Golf Club.
Yeah, Meridian.
Nice. Very cool. It's a beautiful golf course.
It is.
We were there about a week ago or so at another event. Mm-hmm. So it's an amazing time.
My son was a caddy there when he was in high school, so.
Cool.
Kind of a
Good
fun
to revisit.
Trivia, yeah.
Nice. Okay, go to the beer hole.
Go to the beer hole, people.
I love it.
I mean, you'll have to if you play the tournament, because it's one of the holes.
Come get drunk with the Oddos.
Yeah.
I love it.
Yeah.
Well, thank you. I know we're kind of wrapping up. Is there anything else that you wanted to make sure that we mentioned?
I mean, I would just say, if you're even thinking about buying, or you know somebody who is, or you're having a situation with debt where you need some help, you need maybe to realign your debt, look at a refinance, look at a second mortgage, or you want to buy a second home, whatever it is. If you have a family member, or if you hear somebody struggling, they're working with a lender and it's not going well, any of those things, just reach out. A phone call is always free. You can DM me on social, you can email, you can text, you can call. But I always love a conversation. I'm there to advise and help. Sometimes we can't necessarily do exactly what you want, but we'll figure out how to get you there at some point. And again, sometimes I do get calls and they're already in the middle of a loan. And a lot of times I'm like, you know what, where you're at's okay. You don't need to switch, and just give people comfort level or good questions to ask. Ultimately, I want to be an advisor. I want to build community. I want to build the relationships and put people into a better situation than they're in today. So I would just leave you with that. If you're not sure, if you just want to have a conversation, you just want to talk about it, talk it through. If you're having a hard time, any of those things, give us a call.
I love it.
And that's what I really love and respect about you guys, because a lot of it is, you're okay just answering questions, just informing people. Even when I was in finance before, many years ago, it was just like, it was all about getting that application, and it was pushed to get an application in. Yeah. And you guys are just like, do you have any questions? That's it.
Yeah.
And so,
I mean, I'll tell you one quick story. I know we're wrapping up. I'll make it really quick.
Of course.
But I had a client call me last week, and his neighbor is a client I'm working with. And he said, my house is listed. It's not moving. It's in the multi-million-dollar. It's not moving as quickly as he wanted. And my neighbor told me I should call you. Now, he's not going to be a client for me. He's selling. He's already got his listing agent. There's nothing there for me. But I still wanted to help him. He said, what are some ideas? I want to talk to you about a 2-1 buy down. What are things I could use to help sell my home that we could put on the MLS to help intrigue people to buy? Can you help? So I came up with a bunch of numbers for him with different types of buy downs and things, sent it to him. He won't be a buyer for me. Now, in the future, maybe he'll refer somebody. It doesn't matter. But if I can help him get his home sold, put him in a better position, make his neighbor look good because he referred me, all the things,
right.
That's a win for me. So, it's all about that.
Totally agree. Well, thank you again for coming in.
Yeah.
It's always, so educational. I like it. And things change quickly.
Yeah, that they do.
I
That
mean,
they do.
it's hard to keep a pulse on it. So thank you for doing
Yeah.
that for us.
No, it's changing all the time. And I know not everybody loves to talk mortgage and numbers like I do because I could do it morning, noon, and night, and I don't get tired of it.
That's good.
So who
You're
forever hung in with us for this hour or a portion of it, really appreciate you being here, and feel free to reach out with more questions.
Absolutely. Well, thank you all for tuning in. And if you jumped in a little bit late, worry not. It is on Facebook for a month after this, and it is forever on YouTube. You will live infamously on YouTube forever. So again, it's Michelle Oddo, and you can go to oddogroup.com. That's Oddo, O-D-D-O, group.com. And it's the Oddo Group, a division of Luminate Bank, for all of your mortgage loan questions. And yeah, even if you're not looking to buy or sell, just have a pulse on the market. And you can give her a call, 303-961-6906. And with that, we are going to sign off, and definitely stay tuned for an hour of Colorado only music from 7 till 8 p.m., always Monday through Friday. And thank you again for tuning in to an interview, and enjoy your evening.